Welcome back to the channel, everyone. In today's video, we'll be diving into a term that's commonly used in both business and sports: turnover. Whether you're an entrepreneur, a student studying finance, or simply someone who loves to understand how things work, this video will help break down the meaning of turnover and its significance. Let's start with the business side of things. In a business context, the term turnover generally refers to the total revenue or sales generated by a company during a specific period, often annually. It's a key indicator of how much business the company is doing, and it can give insight into the company's size, performance, and market demand. For example, if a company has a turnover of $5 million in a year, it means they have sold goods or services worth $5 million in that year. It's important to note that turnover doesn't account for the costs or profits. It's simply the gross amount of business being transacted. However, turnover can also have a different meaning depending on the context. In human resources, for instance, turnover is used to describe employee turnover, which refers to the rate at which employees leave a company and are replaced. A high employee turnover can be a sign of dissatisfaction, lack of engagement, or issues with management, whereas a low turnover rate may suggest a stable workforce. This is a critical metric for companies because employee turnover can have significant impacts on productivity, morale, and recruitment costs. Now, let's shift gears to the sports world. In sports, particularly in games like basketball, football, and soccer, a turnover happens when a team loses possession of the ball to the opposing team. This can occur due to a mistake, a bad pass, or a successful steal by the other team. Turnovers in sports are often seen as costly because they give the opposing team a chance to score, and too many turnovers can lead to a loss in the game. So whether you're talking about business or sports, the idea of turnover involves something being handed over, whether it's revenue, employees, or possession of a ball. Understanding turnover in a business setting is crucial for evaluating performance and making informed decisions. If a company's turnover is growing year over year, it usually signals that they're expanding, reaching more customers, or increasing their sales. However, it's also important to consider other financial metrics, like profit margins and net income, because turnover alone doesn't paint the full picture of a company's financial health. In contrast, in the HR world, businesses must monitor employee turnover because high turnover can lead to increased costs, lower morale, and potential damage to the company's reputation. On the flip side, low turnover means that employees are satisfied and likely feel secure in their roles, which can improve productivity and reduce recruitment expenses. So whether you're running a business, managing a team, or watching your favorite sports team play, the concept of turnover plays a key role in shaping outcomes. It's a term that pops up in many areas, and understanding its nuances can help you make better decisions, whether you're trying to boost your company's revenue, retain valuable employees, or keep your sports team's possession intact. That's all for today's video. I hope this clears up the meaning of turnover in both business and sports. If you found this explanation helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss out on any future videos. Thanks for watching, and I'll see you in the next one.